Yes, potentially. I would say though we have a differentiated view. We did a lot of work on the bill, and there's a tremendous amount of disinformation going out about the bill. So there's what we call swap math. So there's a notion that's going to raise the deficit by 2.4 trillion, but that's really false because any reasonable person other than would say, well, what's current law and what's it going to change to, not what would happen, what would have happened if the 2017 tax cuts expired versus now. Because we just all know that's a game they play, that they have these things expire. So if you do the proper math, they're actually cutting the budget deficit by 1.5 trillion relative to current law. This is not the expiring expected expiration of the 2017 tax cuts. Now, also swap math is to multiply everything by 10. So that means they're cutting roughly under 50 billion a month. I mean, a year, sorry, which isn't that much. The budget deficit's like 2 trillion, but it's a reasonable start. And the budget deficit is only projected to be 1.7 trillion next year. So there's a lot of hand wringing and political posturing. Of course, the Democrats all want to, blame the Republicans for profligate spending, but it's important to keep those numbers in mind that relative to current law, there are cuts happening. The budget deficit is likely to get better. And the run up in rates, which everybody is blaming on the budget, was caused by Japan's bond market melting down. And we saw that almost 100% correlated. When Japan's bond market stabilizes, our bond market stabilized and started rallying. So a lot of misinformation and misunderstanding about what's going on in the bond market.